think by the time you lot do Breakfast Club, I'll be sleeping.
All right, Grenada. All right, the man that's gonna be in
three
Grenada.
weeks,
Yeah.
you know. Wow.
All right, thank you. Yeah, we're jealous. We're hating. We're haters. All right. No, that's nice. Yeah, you gonna have it with the family, just yourself?
Me and my son, me and my big son. So
Okay. Nice,
yeah,
nice,
man.
nice,
Carnival
nice.
as well. So yeah, man.
Okay,
Looking
man's going over there for the full energy, yeah. All
energy.
right, I'm seeing all my bedrooms in St. Lucia at the moment. I'm like, oh gosh, yeah, listen out the energy. All right, cool. Let's go. Let's get straight into it. So today is Fix It Fridays. All right. So Fix It Fridays is about exactly that. All right. Now, one of the family members, Darren, who he said that he is can't see steps at the moment. He's going through a little bit of a phase where things are a little bit blurry. He's not too sure. He's questioning his own decisions and what he knows and doesn't know, and that's good. It's part of it. All right. It's part of it to be able to, sometimes you do get to a point whereby you know you're not too sure about things, and the reason why is because this trading thing that we're all trying to do is not it's not every time you take a trade you're successful. Okay, it's not every time you're trying to take a trade that, or every time you want to sit down and trade, that there's an actual setup for you to trade. Okay, and ultimately, sometimes you can get to the point where your anxiety, where your impatience, where your desire to be, you know, on a yacht somewhere, starts playing with you. The devil starts saying to you, like, "Come on, like, take a trade. Can't you see it? Hit the button now. Do this, do that." And sometimes that's not what it's about. Okay, but first and foremost, when you get to that point, you have to lean into your rules. Okay, you see, we do that in life. We lean into our rules. Even though sometimes we're having a bad day, sometimes work was rubbish or whatever it may be. We still wake up in the morning. We go toilet normally. We wake up. We brush our teeth at some point. We have a shower. We put clothes on. We leave the house. We go through the motions. We still have these kind of rules to our life of that we kind of do. We don't leave the house and then try to brush our teeth on the street. We don't walk outside the house, go to work, and then try to find shoes to put on our feet. It doesn't work like that. There's a certain order of how we live and how we operate. And when in doubt, without you even knowing it, you revert back to that order. Yeah. Whether you're vexed or not, you're still going to wake up in the morning and then go brush your teeth. Hopefully. Hopefully you're not going to wait, just walk out on road with your mouth stinking. Yeah. Or, without washing your face and there's biscuit in your eye. Yeah. Hopefully you're still going to go through that process regardless. Okay. And it's the same with trading. You have to lean back into your rules. So when it comes to trading the markets, we understand that it's the market lacks liquidity. Okay. Now I'm going to give you guys some things that you can do to try and help your results. Okay. Let me show you something right now. If you want to build your confidence, listen to me. If you'd like to build your confidence in your trading space, what you're going to do is every time you take a trade, you're going to set a fixed TP. Okay. And your TP is going to be at max a 1 to 3 at max if you want to build your confidence. Yeah. Because you see, once you understand the strategy, you see a lot of people find themselves getting into trades and not knowing how to get out of trades. And also what you're going to do is once you've hit a certain percentage gain, you're going to stop trading for the day. You see, I know that even though I tell you these things, you're not going to do these things unless you've mastered your mind. Because I'm going to tell you,
Sometimes,
just go on.
sometimes that's my problem. Is I sometimes expect too much from the market, and I use my hindsight after the fact because for instance, I could be 200 up or something, and I'm like, yeah, it's only 200. Let me keep it going, rather than you know being happy with that 200 and saying, well, there's always another trade. and sometimes that trade kicks back out of me and stops me out for nothing.
All right, let's go into that. I love that. So let's break it down. How big is your account when you're £200 up?
This one's 10K one.
All right. So let's put things into perspective. Okay, let me draw from my calculator. All right. So if you don't already know that £200 is 2% up on the 10K account. Okay, if you don't know how to work that calculation out, that's 10K. Yeah, this is the very easy way that I always process things in my brain. Might be different in your brain. That'll be why I never need a calculator to work out any percentage for anything. Yeah, is 10K is 100%. Delete a zero is 10%. Delete a zero is 1%. If he's 200K up, £200 up, sorry, 1% times 2 is 2%. All right. Now, I'm sorry if I'm teaching people basic maths, okay, and they think I'm being, taking the piss, but some people don't find it as easy to work out certain things. So I've just told you how I do it all the time. So, Jason said that he's been trading and he's 2% up on his account, and he doesn't see that as enough. Now, let me tell you exactly what's going on. Okay, what's going on is this: you don't have enough money. That's your problem. You see, your problem is that your account size is a lot smaller than your expectations. Okay, your account size is smaller than your expectations because you see what's happening right now with Jason is that because he's only got a 10K account and he's only risking maybe 1% at a time, when he gets £200, he doesn't see that as any type of achievement because he just doesn't have enough money for his expectations. Yeah. He doesn't have enough money for his expectations because, you see, in another scenario, okay, Jason has a 100K account, and obviously maybe it's prop or whether it's real, doesn't matter. It's the same principle. He's got a 100K account, and then he makes 2%. And for the people that are not great at maths, once again, watch. That is 10%. That is 1%. Times 2, that is 2%. See, when Jason makes £2,000, he's £2,000 up in his account. Okay. If this was real funds, you got to understand that £2,000 is £2,000. So I don't know how much your rent is, your mortgage is. I don't know how much your car payments are. I don't know how much your trip to Grenada is. But if Jason took 100K and he took a trade and he was £2,000 up, £2,000 is £2,000. And yes, it's only 2% of his account. But if he achieved that all week in a 5-day week, he would be 10K up. Yeah, just making 2% on his account. Not trying to make 10% in one day. Yeah, like a lot of the prop firms got us believing you're going to go and do. Yeah, so that's 10K in a 5-day week, and essentially possibly 40K in a month. Now, respectively, most people don't earn 40K in a month. All right. Now, this problem, the markets know that this is the problem with most people in the markets. This psychology, the markets understand this. They understand that most people don't come into a broker, a trading situation, and go to their broker and go and dump £100,000 of their real money in. They don't, because most people, that's quite a large percentage of their net worth. For you to dump £100,000 in a trading account when you're not confident or you're not an expert, you're not experienced, is unlikely to never going to happen. It's unlikely to never going to happen on the scale of things. Okay. Now, don't get twisted. Maybe if you've got, 10 million quid, and you say, okay, I'm going to try this trading thing, and you put 100K in there. Maybe you might be happy, but then again, it's all relative. Maybe you're not, because your understanding or your expectations of money are much larger as well. So maybe making 2K in a day for somebody who's got 10 million pounds in themselves is a game. It's nothing. It's relative. So we have to reprogram the brain, okay? Because this is not just your problem, Jason. This is everybody's problem. You have to reprogram your brain. You've made 2%. You have made 2% on your money. How much money do you make on your money that you give willingly every single month to the bank? How much money do they pay you at the end of the year? How much interest? Do they say, "Here, thank you very much for giving you giving me your money all year"? How much money do they pay you in interest? I don't know what it is. What is it a year nowadays? I don't even know. Couple percent? 3%? I don't know. 2%? I don't know if they changed it. Once upon a time, it was like 0.5%, 0.25% for a year of giving them your money. Now, you see, what Jason doesn't understand is in a different life, yeah, in a parallel universe, Jason is in control of a fund that has 100 million quid in it. Yeah, he's a trader and he trades this. He's in control of those funds. And today or Monday or whatever day it was, Jason made 2%. For his investors, Jason made 2 million quid there, and Jason gets a performance fee of 2 million quid. Or furthermore, not even that. Jason made 2 million quid of that money. He goes home today. Mrs. says, "How do you do?" He goes, "I made 2 million quid today." 2 million quid is 2 million quid. 2 million quid buys what 2 million quid buys. But Jason's done nothing different here than the person, than what he couldn't stop, what he wasn't happy with when he did it here. This is the biggest one of the biggest problems with the trading space. The money you have is just not big enough. Because you know what happens now? Let me show you the flip side. Because that money is not big enough, and Jason's got his 10K account, and he's only risking £100 at a time, and the market's only giving him 1 to 3s, maybe 1 to 2s, maybe 1 to 1s. What Jason starts to do is his next trade he puts on looks like this. And that trade crashes out, and he loses £500 from his 10K account. He just lost 5% of his account. He does that, and then now he's kicking himself. Now he wants to get back to zero. So his next trade he takes is also for £500. That one crashes out. Before you know it, Jason enters into a spiral whereby because now, if after taking his 10K account to, let's just say 8.5, and now he decides he's going to go back to actually trading risk, he's like, I'm in a hole now. So, to be fair, £100 is not even 1% of this account no more. £85 is. So now he's in a hole, and now he's trying to go back to his rules. And that even feels even more painful, because now he's going to put £85 out. It's going to go for a 1 to 3, and he's going to make £255, and he's still in a hole. Now he's only at 87, whatever it was. Yeah, he's still in a hole, and he's got to keep going and taking great trades at his now 1%, because now he's decided to go back to his rules because he's scared now the way he's blowing his account. And even after he takes a good 2-3 days of great trades, he's still in a hole. This is the problem with trading and the psychology of human beings. So what do we have to do? We've got to try and put some rules in place that we can kind of hack this behavior. So let me explain to you like this. Here's the first rules. Whatever you're trading, whatever your account is, your account size, all right? Whatever your account size is, you have to not see it as that's the money that you have. Okay? Whatever your account size, you can't see that money of that size of the account as that's the money you have. All right? Because that way of seeing things is a high risk way of seeing things. Yeah. You got to look at this as this is your app, especially if you're in a funded account, in a prop firm challenge. In a prop firm challenge, this is definitely not the money you have. In a prop firm challenge, The money, if you have this, you actually only have this. And I go one step further than that. You actually, on a daily basis, which only takes you 1 day to blow your account. It's not to say you have to take 6 weeks to blow your account. You actually, in a prop firm account, only have this. If you had 100K, if you went and bought a 100K account. This figure, I don't know if you've noticed, this figure here is significantly different to the figure that they dangle in front of you. They dangle 100K in front of you, says, yeah, you got a 100K account, but you don't have a 100K account. You've actually got only 10K account. Because if you blow 10K account, you're done. And actually, you don't have just a 10K account, because this is your total amount you're allowed to lose. If today you go on tilt, you've only got 5K account. Let me tell you something. This 5K is significantly 20 times different than 100K. Because if that was your real 100K, you could lose 10K. You're still in the game. You're still in the fight. Yes, you're down, but you could lose 5K in 1 day. You're still in the fight. Your 100K has gone to 95K, but you're still in the fight. You might take a good trade afterwards that might get you straight back out of that hole, but not with a prop firm account. So that's the first thing you need to understand. Yeah, that this is not your money. Actually, this on a daily basis is your money, and this in total is your money. Okay, not 100K. Now, a lot of people don't understand that. They get carried away. So look, let's even make this more relevant to Jason's case. Okay, so with Jason's case, it's even worse than this. Okay, because with Jason's case, he has a second. A 10K prop firm account, which actually means that's his money, and actually means that's what's going on. So every day, and let's put some parameters into this as also, just to know, just so we know. Let's grab this. I should have used Word or Excel for this, to be fair, perfectly honest, but don't worry about it. So this is total. See what I can do here. It's going to be horrible. This is, no, this is, what should I call this? This is account. This here is total. Oh my gosh. And this is per day. All right. And we're going to do that. And we're going to do that. Forgive my diagram. All right. So the reality is this, guys. When you go and buy a 10K account, the first thing, oops, this is wrong. I'm missing a zero here. Or something look weird. All right. The first thing you got to understand is this. You don't really have 10K. If you're looking at it per day, which most people should do because you can easily blow your account in a day, you've got £500. Now, some people take the attitude of, okay, cool, you know, I've got a 10K account, I can blow £500. I'm just going to take, you know, 5 £100 trades, and if I win, I win. If I lose, I lose. But that's not trading. That's kind of like you're flipping, you're gambling, you're hoping for the best. Embrace the fact that you're not a great trader. Listen to everything I'm saying to you and understand why I'm saying it to you. Embrace the fact that you are not the best trader known to man on the planet. Like you're not, as soon as you step to your computer, everything's going to go well for you. Stand on the other side of that conversation and say, you know what? More times out of 10, I lose my trades. I'm telling you that because that's where your power is going to come from. Because if more times out of 10 you lose your trades, you're going to stand on the side of caution. Well, what happens is, especially when we get a new account, new funded account, or we put some money in an account. Right now, you put £1,000 in an account. I'm telling you, you start feeling strong. Okay, woo, got my £1,000. I'm about to turn it into 100,000. Yeah. But if you start taking L's above your rules, you will slowly find that you find yourself in a hole whereby all you want to do is get out of that hole. And the pressure for you to get out of that hole makes you start to break your rules. Okay. So for funded accounts, immediately understand that you do not have a 10K account, but a 100K account in this example. You've actually got a 10K account and you've actually got to a 5K per day account. So if you've got a 5 day per day account, you've got to ask yourself, how much money do you need to make per day to be happy here? Because if you made £500 in one day for your day account, all right, that'd be 10% of your day account. Now, I'm not trying to say that is massive in regards to the total goal. Forget about the goals. The goal is a fictional thing that they've put into place. You need to make 10% and make 5%. Well, you think all traders out here are making 15% on their money trading the markets, in a day or a week or however long it takes for people to normally blow their account? Because I know nobody's bought a prop firm account here and traded it for a whole year and then said, oh, Jay, after the year, I blew my account. No. What happens? You get a prop firm account, you go nuts, and within 2 weeks, you've blown your account. But that's not trading. I'm trying to change the mindset. That's not what's happening when you see big traders out here driving around in Ferraris and they say that I work for this company, I'm actually a trader. They've not only got the infrastructure to trade profitably, i.e. a compliance person, this person, that person, people checking over their work, making sure they've got somebody doing the fundamental analysis for them. They're in an environment whereby they've got certain restrictions. Not only all of these things going for them, they've also got a lot more money. So therefore, they don't have to be saying I'm trying to make 15% on my $100 million account today. They don't need to. They don't need to make $15 million today. They might get paid a performance fee, which is typically what happens, a percentage or a management fee. Let's imagine that they made a 20% management fee. Let's just imagine. Or let's make an easy number, 10% management fee. And for whatever reason, that person is in control of, let's just say a good number, $100 million. All right. And he makes today 1% on his account. Yeah. 1% of 100 million would be 1 million. And he, for whatever reason, gets a 10% performance fee of his £1 million that he's made his clients. This is how he's able to drive around his Ferrari. He only made 1% today. Ain't no genius. He isn't like the second coming. He just has a lot more money to play with. So unfortunately, that's not my fault or anybody's fault that you don't have £100 million to throw into a trading account, or that you're not working for a firm that's going to give you and say, hey, you are Jason, here you can manage 100 million for us and we'll give you a 10% performance fee on anything you make. That's not nobody's fault. That's just where you are in the universe. It is what it is. Therefore, if you're looking at your trading journey, that what you're trying to do is you're trying to take your 10K and turn it into £1 billion, you're confused. What you can do is you can generate an income, a couple hundred here, a couple hundred there. But you have to understand how you can do that. Jesus told me he just made £200 on his 10K. Now let's imagine that's his real account. I don't know if it is or it isn't, but let's imagine it is. Okay. Well, he's just taken 10K, made £200 today on his 10K. Why doesn't he close his laptop and say yes? Because if he can keep up that behavior, in 1 week, Monday to Friday, he makes £1,000 on his 10K. You have to be able to know when you've won. So you've got to put in all of these variables into play. If Jason had 100 million quid and he made 200 pounds, I might be like, yeah, maybe you need to go a little bit harder, bro. Just a little bit. I don't think it's, I don't think you're fulfilling your potential. On his 10K account, he's killing it. Just make 2%. Change the mindset. You are not going to take 10K and all of a sudden be able to be at the Ferrari showroom buying something from Ferrari in one day. That is fiction. It's not fact. It's fiction. So if I was you guys, let's imagine I put real money. So I put my real 10K into an account. Okay. What I would do is I'd have a daily amount of money that makes me happy. Forget about, let's put another field in here. Let's talk about real money. Because I actually think for a lot of people, if they can master this, I would say to you, don't worry about a prop firm account. A prop firm account is because you don't have any bread. You don't have any money whatsoever, or your money's quite low, and you're not confident enough to put real money into a brokerage firm. So we say we can use a prop firm account in our learning phase because it's relatively low risk and there's a potential that you might make good money out of. But if you want me to be totally honest with you, trading a prop firm account, not your real funds, is you're making things difficult for you to make actual money that you can spend in the shops. Why? Because you got look at the difference. If I had a 100K account, you have to make £15,000 out of that account in a prop firm before they even give you a live account. If you had real 100K and you just made £15,000 before you've even made a single penny, because you've got to then go on and make more money to actually get paid out, but that's £15,000. You could go, you can do something with 15K. I think your Grenada trip's going to be pretty good if you have 15K to blow. Yeah, I don't know. I don't know what you're going to achieve in 15K on a couple of weeks trip in Grenada. We might be seeing it on Instagram or reading about it in the newspapers. I don't know. I don't know how much coconut you can buy and things that can go on for 15K in Grenada. So the reality is if you can master this concept of what is an amount of money, let's go back to the 10K, that would be a good return for you if you was trading your real £10,000. All right, well, 10% is £1,000. And we've already identified that making 10% of money is pretty difficult. Okay, £100 is 1%. All right, so let's imagine that for argument's sake, you just said that all I want to do with my money, my real 10K, yeah, is not even make 2%, is make 1% on my money. And when I make my 1% of my money, I'm done. And I'm going to wait for another day whereby I can see my rules. And what I'm talking about there is our Asian session, London session strategy that we trade in the mornings. Yeah. And being able to find another trade whereby when I make another £100, I'm done. Now that is very conservative trading. But let me tell you something. The fact that it's conservative means it's achievable. And before you know it, 2 weeks into doing that successfully, let's imagine that there's 2 weeks, that's 10 trading days. Let's imagine that for 6 of those trading days, you achieved what we said, okay? And a couple of the days you took some losses, a couple of the days you took break even, but either way, you turn around, I'm talking on 1%, not 2%, and now in total, in 2 weeks, you made £500. In 2 weeks, that's taking some losses, taking some break-evens, taking some wins. You made £500. You got to ask yourself, would you be happy with the fact that you made £500 from your 10K account in 2 weeks? Because if you can continue that behavior, by the end of the month, you might be, let's just say, up £1,000. By the end of the month, sorry, you might be up £1,000 because you've done this in 2 weeks. Would you not be happy that in 1 month you added £1,000 to your 10K, which is massive, which is massive. It's a massive achievement. If you look at it like that, in 1 month you've made 10%. That's a massive achievement. But when I was telling you to let's just trade and finish your day at trading at 1%, It sounded a bit funny, like 1%, £100. £100, this man wants me to say I'm done for the day. It sounded a bit like, it's not great, is it? I've been up hundreds. I've been hundreds. I've been trading, been up $300, $400, $500 or pounds or whatever your account is set up. Did you feel satisfied at that point? No, you didn't. Jay just said he didn't feel satisfied. That's his problem. But when you look at it like this, at the end of the month, not the end of the day, not the end of the week, not the end of the fortnight, at the end of the month, you look at your account and you've actually made £1,000 from a 10K account. Is a massive achievement. Because if this was 100K, you would have made 10K. Look, I always use 100K because I think 100K is achievable. Yeah, something could happen in your life where you've got 100K, you're in a good job, you've got savings of a few $100,000, or you sell your house and you've got some money, or somebody dies and leaves you some money. You could have 100K. It's more realistic than me saying that, at some point everyone's going to have £1 million. But let's just say you could have 100K. Real funds, yeah, in a live account. You've got to, if you're going to put that money in a live account, you have to be realistic and understand what would make you happy. What would be seen as a win if you had 100K that you put into your account? So someone's died, and for whatever reason, you've decided that from the $500,000 that's been given to you, that you're going to put 100K into an account. Yeah, even that's quite a large percentage of your wealth. Well, let's imagine that you've really mastered your psychology and you understand the strategy. Let me put it out. Let's ask some questions right now without doing the math. Let's see quickly, quick fire. You've put 100K in an account. How much would you be happy with to make a day on this account? Somebody tell me. I want to pick some people at random, or you can just tell me. Anyone can answer. Let me see where.
I'd say 0.5%. I'd be happy.
No, I want to hear the monetary number. Don't tell me what percentages. The percentages are not real in people's minds.
500.
Yeah. £500.
Yeah, listen, between 500 and 750 a day is easily achievable. And if you do it by 2...
Oh, no, that's not what I'm asking you, though. I don't want a diplomatic version. I want to hear you just spit out a number that you're really happy with. 750. All right. So cool. This is very interesting. This is going to be great. This is what I'm going to do for this one. We're actually gonna make this happen like this. This is gonna be great. Come, give me some other numbers. I'm gonna take a poll right now from everybody about the numbers. All right, and I'm gonna show you something at the end of these numbers.
Well, how much extra you'd be happy with on top of your wages that you're getting now?
No, I'm just saying to you. Generally, this is the scenario. I want you to understand the scenario. Okay, it's a very simple scenario. Okay, you've got 100K in an account. Okay, £100,000. In fact, don't worry about that. Yeah, you got £100,000 in the account. I don't need to write it on here. But what is the monetary figure that you'll be happy with? Alan has said he'll be happy with $750 a day. What are you saying, Darren? Let's go. Just snap it out. I don't want no maths happening. The 100K is put in an account. Doesn't mean that you're ending it. It just means that something's happened in your life. I don't know, you sold a house, you've got 200 free. Let's say you've got 200K. You've got 200K to your name. And because you've been dedicated yourself to trading for years now, you're in Unity, understand the strategy, you're very, very comfortable. Boom, boom, boom. You've decided to take 50% of your 200K from your house and put it in a trading account. What are you happy with generating as a day trader from your 100K there, Darren? Let's go. Quick fire.
500.
500. Let's go. Who's next? Somebody who's next before I pick them. Who's next? Quickly. Let's go. Who's next?
I'll go for £1,000.
Jason says £1,000. No problem. All right. Let's go. Who else wants to go? Let's go quickly. Who else? Anybody else? Else?
500 sounds good, man. 500.
500, man, says, woo. All right, let's go. I'm going to do 500 a day. All right, what else? Who else is there? Sister. I've got sister banners on there. We've got stars on there. Nick. Anybody else? Give me a number. Give me a number. Nobody else? Maybe people that's busy. I don't know.
15 grand.
15 a day. We're saying you want out of this. It's per day. Per day?
Per day. I've got lots to do.
Oh, brought it. Okay, no problem. 15. Let's not get rid of
high life.
yeah, high life. All right, guys. You know what my point and I'm trying to make to you is this. I'm going to do some maths right now. You ready? we're going to times this by 20 days. All right. So in here, I'm going to put a formula. Okay.
Wait, Jay, she said 15 grand, innit?
She said 15 grand a day. That's not a problem. Because the sum. All right. B2 times 20. All right. And then we're going to do this just so it looks real. Because remember what I said. Remember the scenario. The scenario is that you have come into some money. All right. You never had that money before. You've come into some money and you've taken that 200K and you've now you've taken that 200K and you've put 100K into a trading account. Okay. Now, you lot are telling me that from your 100K that you're trading, you would be happy with this amount of money. I'm going to ask you something very simple. Does anybody here make any one of these numbers here currently per month? You can say yes. If you say yes, I'm not going to argue with you because it's not impossible. No. But I'm just saying, does anybody here make anyone, let me zoom in a bit because this is it's a bit small for some people looking. Does anybody here make any of these numbers here per month?
No.
Yeah. I'm talking about net after tax. Yeah. And I'm going to say probably the majority, because I can't talk for anybody. I can't even talk for anybody, but I can't. I'm just saying probably the probability is no. All right, but yet you came into some money, okay, by accident. So someone sold a house, or someone died, or I don't know, you hit the lottery. You took 50%, you took 100K out of your 200K account, and you was aiming for money that you have never, ever seen before per month. Bearing in mind, you've been living in the world, you've been existing fine, you've got a car, you've got a house, you go on holidays, man's going to Grenada, man's living a great life, as it is, never seeing this figure. Never seeing these figures. 20K a month, but yet man's going to Grenada for 2 weeks, living his best life in the carnival and doing all types of things. Now, my point I'm trying to raise to you is this. What about if you turned around, because for you to make, you've got 100K, so £1,000 is 1% a month, is 1%. Let's imagine you turn around and said, you know what, Jay, to be perfectly honest, what I want to do is I want to be able to replace the fact of me working, because my strategy doesn't need me to stay at the computer all day long. You get what I'm saying? So I'm trying to make you work backwards. What amount of money would allow you to stop working but trade for a couple hours in the morning and then go and live your life? Because you can't trade every single minute of the day thinking you're going to see yourself, you're going to make more money because you trade in more time. It doesn't really work like that. So what amount of money, then this will change some stuff. Because really, if I go there, I'm going to say the average man, let's just say what? I don't know, £500 a day, is that too much? Is that too £300 a day, £200 a day? I don't know. Let's just say, someone give me an average. What do you earn a day? Or do you have to tell me and be open your business? But what number is an average man's wage per day after tax?
150, isn't it?
150.
Yeah.
It's what somebody says. Does anyone disagree with that and give a better number?
Actually, 150 would be the national average wage, because it's 260 working days, right?
Correct.
So 150 times 260 is 39K. So
let's push
that
the
would
boat
be the national average. That would be the national average.
Let's push the boat up, because this is individual to everybody, because people working different jobs have different earnings. Let's push the boat. Let's double it. Let's say you want to make £300 a day. All right. So £300 a day. Let's use a similar formula over here. This is for trading days. So we're gonna sum. All right. So let's imagine that that's the money that you're making from your trading every single month with 100K account. All right. With 100K account. And how many weeks are in a year? Maybe I should have done it different than that. The number's wrong anyway, because I'm not doing it in the right way. But I'm just saying to you, let's imagine that this is a month, all right? And I'm going to do a very loose kind of calculation, because I'm not doing it properly. Of the loose calculation is going to be times that by the year.
Yeah, do about 260 days, Jay. Yeah. That's 260 working days in the year. Yeah, 300.
No, that's wrong. So is D2. So I'm just doing it in the formula.
Yeah.
All right.
That's better.
So another question I'm going to ask is there anybody that earns this money currently after tax, even though trading and the tax things is another conversation, per year? And I'm saying majority of people, as we know, by the national average, you don't have to tell me yes or no, because there are going to be people that have good jobs, are going to say no, this is above the average. So this means you've got 100K and you haven't even risked 1%. You can risk less than 1%, not aiming for the moon, and still be able to achieve a £78,000. Just trying to hit this number from 100K. Let's work out what that is on 100K. So we understand that we can just do it like this. So when you're talking about what you're risking, a man say, are you risking 1%? Are you risking 0.5%? Man's risking 0.3% of his 100K. Let's just say 0.25% that you could risk a day trying to achieve a one-to-one, yeah, and quit and say, I'm done for the day. And if you was to achieve that, yes, we are not taking into consideration losses or this, that, and other, but look, it's realistic. If you could keep trading until you get to this number. Even if you take a loss or you take a rare entry, you only risk 0.25%. You might say, you know what, I'm stopping it. If you could stop at this number in a year, you'd make this off of your 100K. Now, what I'm saying to yourself is that we've got to adjust this mindset, because you see the hedge funds, you see Barclays, you see Goldman Sachs, they're not out here trying to lick these type of numbers. And they're the best. They can hire the best. They understand that the percentage chance of them losing the money if they started going nuts is too high. They don't need to. Look, I've already said, just on 100K, you trade in a couple hours, you can still keep working. You guys are still working now, but you're able to get into Breakfast Club. How many times you come to Breakfast Club and I'm already told you I'm in the trade and this trade is slapping? So you can still work now, so you can add this number onto what you actually earn in your current job. But let's just say you don't want to do it because you hate your job. This here is being generated from 100K. Yeah. And I'm saying to the point is that it sounds unrealistic because people typically don't understand how to stop trading. They don't understand how to turn and say, obviously we've turned out for the whole year and it's not realistic, this number. It's not a fixed number. But the point I'm making to you, there's no reason why you can't have a much more, lower the bar a little bit and still do really, really well for yourself. The problem is it doesn't start off looking like that. It starts off looking like, oh gosh, I made £300. Oh, I made £600. Oh, I made, it's not great. It's not going to change your life. But after a while, it starts to snowball and build confidence. So what I'm trying to change the mindset and rewire is the fact that the reason why we are all blowing accounts, the reason why we are all finding it difficult, because where's the thing that I wrote on the screen before? We just don't have enough bread. We don't have enough money. So what we're doing is we're over leveraging. What we're doing is, even though this is simple maths that we understand about the prop firm accounts, that we don't want to face the music, that we actually don't have 100K. We've actually got 10K. And we don't have 10K per day. We've actually only got 5K per day. And we don't want to face the fact that actually achieving 15% on the account before I can actually make a single pound from any money is a big achievement. Because if you had that in a 100K account of your real money, you'd be £15,000 up at the point of you passing your challenge. At the point of you passing your challenge, you're able to go to your missus and go, I made 15% on the money. How are you making that? Even if you had even some great investments, they're going to return you 15% per annum. I'm talking about some great investments, low risk investments, not your stuff with high volatility. This is the mindset that needs to change. Then we lean into the strategy. So let's quickly lean into the strategy. All right, for the people for going back to Darren. All right, what Darren spoke about when we first started. Our strategy is simple. Okay, our strategy understands that markets move towards liquidity. Okay, so therefore, because we live in the UK, we have the ability to frame liquidity of low volume sessions. What does that mean? That means that large volume happens in our London session and our New York sessions, with our overlaps happening between London and New York. That's the largest volume in the Forex trading space. Okay, but low trading volume for our major pairs that have the letter USD in it. Yeah. Low volume times and times where we can frame liquidity can be seen in our Asian session. Okay, can be seen within our Asian session. So therefore, what we can do, have a look. I'm going to use an example. I'm just going back to Wednesday. What we can do as traders, and this is Wednesday. If you don't know, is there a way I can show it the days? Yeah, I can. Have a look. Let's do this. Let's put the days on so you guys can actually see the days, which is going to be this. No. I think it might be. Yeah, it actually is this. Don't worry about it anyway. Days, they open. Which one is it? Separators. No, I don't. It's not that. It's cool anyway. You know the days of the week, all right? Either way, here, we're going back over here and we're looking at this and we're saying, okay, we're going to frame, for those of you who don't know what I'm looking at this day here, which is Wednesday, the 23rd of July. Okay? We're able to frame that day, understanding that the Asian session creates a pool of liquidity either side of it. So, Darren or anybody else, the first thing we want to do is we want to understand, actually tell her, the first thing we want to do is we want to go and zoom out and understand what's happening on the bigger picture. Okay? Well, understand what's happening in the bigger picture. Is the market overall bullish? Is the market overall bearish? Yeah? Should we start there? We can start there, but then I'm going to have to be going backwards and forwards. But then when we get back down to here, we want to frame where the liquidity is. All right. So if this trade, if the charts were like this, and we didn't know what was going on, we can determine and make a assumption that there's a pool of liquidity here, and there's a pool of liquidity here. At this point, we don't know what the market wants to do. But we understand the markets trade towards pools of liquidity, and the way I give you an analogy is that pool of liquidity is the food, it's the energy source, it's the fuel the market needs before doing what it needs to do. Does this happen 100% of the time? No. Sometimes it doesn't care about this pool here, and it wants to go for a bigger, tastier pool. Yeah? And it goes past and says, we did like that food. It was all right. Maybe you might even see a little bit of a kink in it. It might come up here and go, we like that, but you know what? We want the oxtail all the way up here. Sometimes this does happen in the markets. Therefore, the overall burn of what the markets is doing has an impact on that. But more times out of 10, and when I say more times, even if that is 6 times out of 10, means you're profitable. Yeah, even if it is 3 times out of 10, and you know how to manage your risk to trade for 1 to 3s, yeah, or 1 to 2s, means you're profitable. Remember, that's only 10 times out of 10. Even if it works 3 times out of 10, once you're not taking 1-to-1 trades, you're taking 1 to 2s, 1 to 3s. Even if it works 3 times out of 10, which it definitely does, because we see it happen every single morning. Yeah, well, most mornings. Yeah, you're going to be profitable. Now have a look. We frame the liquidity above this line here, which we call liquidity. Below this line over here, which we call liquidity. What I've just done is I've framed the Asian session. If you don't know what the Asian session is, it's here, the Asian session. Yeah, and it's a kill zone time within the Asian session. Asian session actually keeps going past here, but this is how we're framing it. What am I waiting for is I'm just waiting for one of these energy sources to be tapped into. That's what I don't know which one it is, because I have a crystal ball. Could be the one above. I'm waiting. And as I wait, I go, oh, hello, look. The market decided to come and pop this bubble down here and tap into this energy source. Nam, 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 nam. It's curry goat. It's feeling very strong, very healthy. It's ready to make the journey to the promised land. Where is the promised land is the next point of interest. So if this took this liquidity here and this high was a previous interest, well, that's the next point of interest. If it's come down here and it's taking its the first mountaintop it has to conquer is here. So on a simple basis, here's your trade for the day. You're looking to see if you can, obviously there is we need our confirmations, we need to see what we need to see, but your trade for the day is getting to that line. Yeah? And that trade for the day there, in this instance, I'm trying to see what my little tool is without revealing too much, is a 1 to 5 trade. Or tell them, I can't say it's 1 to 5 because you don't know our entry yet. Yeah? We don't know our entry yet. But let's just say for argument's sake, you know, it's here. Now we know that just it popping this liquidity alone isn't enough for us to hit the button. We still need to see our strategy. Our strategy is when the market takes liquidity, we are looking for some sort of manipulation pattern. And a manipulation pattern, as much as it sounds like a big word, it's just a change of character. Because have a look here. The market was going down, making lower lows. In fact, let's make it even more detailed than that. All right, let's do this. The market, sorry, let's go again. Let's change this. Let's make it that. Let's make it something that we can see. So we're going to make it white. And we're going to go again. All right, the market was doing this. Down, up, down, up, down, up, down, up. Marked about. But ultimately, I don't know who you are, whether you're going to be my new 6-year-old son, just turned 6, or whether you're an advanced somebody, this market is making lower lows, lower highs, lower lows, lower highs. Even at some point, it made some equal highs, but it didn't start making higher highs and higher lows. It ultimately is going in one direction, which is down, bearish. But when we go over here, if you start seeing here, if I go to my line chart, which might make things a little bit easier to see, we start seeing the market making higher highs, higher lows, higher highs. This is a change of character. This is the market that was once doing something else, making lower lows and lower highs, to now making higher highs and higher lows. And it's not just making it randomly, it's making it after eating the curry goat or the oxtail or the Lucozade or whatever you want to, say in your mind to make you remember what I'm saying. Yeah. It's doing it after getting that energy source. Where we've gone. Let's get back to Wednesday. Yeah. After taking that energy source from here. Nam, 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 nam. And then where is the target? Look at our target, our first milestone. Even look, boom. And that's your trade. And that's you done for the day. And that's you going back to your spreadsheet and going, yep, 1 day down. I'm happy. And growing your account. Now, when we get into this area here, there are things we look for. We look for manipulation patterns. Yeah. We look for the market to make a manipulation W when it's below price, or M when it's above price, when we're looking for sales. Now, this isn't one I made earlier. I haven't organized this session for you earlier. And now, hand-pick this out there. But I can see that there's a 5-minute entry here. Yeah, I know that there's a smaller entry. I believe it's probably on the 2 minutes from what I've seen. But I can see you could have taken a trade probably here with your stop either below the last low wick or here, and you could have gone to here. And that, well, it's not great from what I've drawn in here. But let's say it's a 1 to 1, 1 to 1.5, 1 to 2 trade. Okay. I know that there's a better entry. Well, look, you could have been aggressive below this last low. Let me see if you would have survived. You would have survived. yeah, because you went below this wick here, with your spread times 2, and you said this was your entry, you would have survived. That's a 1 to 2 trade. Okay, you would have survived. I actually know that there's a better entry in here. Yeah, on a smaller time frame, I believe that there's a better entry in there. Okay, but I'm just saying to you, this is our strategy. Our strategy is we're looking for where is the liquidity and where is the market taking that liquidity? Nam, nam, nam. Then the market's going to trade from that liquidity to another place where there's liquidity. Look at the other pool of money. Look at this. This money has been stolen. All the dollars that were in here, all the big pound signs, yeah, all the monies that was sitting, in here, has been stolen by thieves. The market's a thief. So if I'm a thief and my job is stealing money, where's the next money? Oh my, what have I done? I've done accidentally. Guys, when you hit spacebar, it moves to the next, you see the next pair that you've got in your watch list. And I accidentally, when I get excited, them big fingers, let's go back, see where we were. Yeah, all the money that is taken from here, if you're a thief, if the market's a thief and it's just stolen this money, this is his job, to steal money. After it steals this money, it was like, yeah, high five, wicked, we stole the money. No, they start saying, what's next? What's next, bro? So yeah, but I'm not going to lie to you. We did decide to come down here, but there's some money up here as well, you know, bro. And the market says, okay, say no more. So say no more, fam. Let's go get that money. Bingo. Takes that money. Now, we know better. We know some other stuff. We know some other nuances. We know that sometimes the market doesn't go all the way to the other side. We know that sometimes the market only goes to 50%. So if we got a great entry here on a smaller time frame, let's imagine that we could see one. You can't see one on the 1 minute. I believe it's on the 2 minute. Okay. Let's try and get, I should just put the date in here so I have to stop dragging it. But let's imagine that we got a great entry in here. You see, I can see an ugly manipulation kind of scenario happening in here, but it tapped in very deep, so we wouldn't have taken that because it kind of violated. Let's have a look. Kind of violated this area here, but let's imagine. I think it's on the 2 minute time frame. You can see it here. It's on a 2 minute time frame. All right. And then my market tapped in here, corrected. So let's imagine, for argument's sake, this was our entry. Oh, it's actually quite a big candle here. Strength and speed here with our stop below this low aggressively. Okay, so this is our trade. Entered here, stop below this low aggressively. The market did come back, give us the heebie-jeebies, but did turn around. Okay, well, we know that when this market starts getting to 50% here, we're already a 1 to 1.5. We have the ability to protect ourselves. Say, Jay, market's got to a 1 to 1. It's at 50%. I'm not too sure because why might I not be sure? Because I might be saying that the overall direction of the market is bearish and I'm in for the buy. So I'm a bit concerned about that. I'm a little bit concerned that the overall direction of the market is bearish, but I'm in for the buy because liquidity was taken from below. So therefore, I might decide to protect myself as soon as I see this market getting to 50%, because I don't know whether the market's going to keep getting bearish and stop me out. But here I cannot lose money. Here my account, my 100K account is not going to go backwards. And the market does what? Does have a little reaction here. Comes all the way down here. I don't care because I'm risk-free. Doesn't stop me out. Goes to my target. I'm happy. Thank you very much. Bob's your uncle, fan is your own. If you didn't have a fixed TP in here, you would have been watching this market. Let me ask a question, a slightly higher level question. Can you guys see anything, any concerns in those candles up here at this point of interest, which is your target? Essentially, it's essentially a TP. Can you see anything on the 1 minute time frame in those candles? Let me get rid of this word London because it's throwing us all off. Okay. And let me fade this out a little bit because it's very, very bright. Okay. Can you see anything at the top of this mountain here after we've just hit our target? That's a bit of a concern if you didn't have a physical take profit in here. But is there any sign that might make you decide that you want to close your trade here? Can anybody see any sign? But if you was in for the buy, can anybody see any sign here
Yeah.
that might go on?
I would say strength and speed from that point. A
In
reaction.
the wrong direction. Yeah, I'd say that. I'd say that was one thing. What else is obvious? What else could you say? What else could allow you to at least get out that trade? Maybe not at the top wick here, because nobody ever.
Liquidity.
Yeah, well, we know the liquidity, yeah, because it's taking the liquidity from above the Asian session. So that is definitely going to be a reason why. That's the reason why we protected ourselves in the first place. But also, I'm not going to say change of character, because here in that circle, we can't see a change of character yet. The market is still, look at my dots, it is still making higher highs and higher lows and higher highs and higher lows and higher highs and lows, higher highs, higher lows and higher highs. We ain't got no change of character yet in that circle. But what can we see here? And this is what we talk about confluence and combining our knowledge. What can we see in there that's a bit of a red mark?
The
red
wick
flag.
on the top candle there.
Yeah,
the wick as well. The wick as well is showing us real rejection, because this means it was a big green candle, and the markets shoved it down here. Yep. So I'm going to take that. So far we've got wick. So far we've got strength and speed on the wrong direction. So far we've got liquidity. What else? Is there anything else?
I would say, well, I can't see to the left, but I can't see any more data.
Well, the data is this Asian set. I've faded this out too much. Let me put it back a little bit where it was. The data is that when we first started, we marked up all of our levels of liquidity. Look, that's why we've got this red line over here. So we know we've taken Asian session here. All right. So that's the liquidity you spoke about. What else? Because it's all good answers, guys. All good answers. It means that we was in this trade from down here. Everything was going good. Coming up here, we got to a point whereby, let's imagine we didn't have a fixed TP. We was here actively watching this trade. Okay. What things would make us think to ourselves, you know what? I think I want to take my money. I'm already, 1 to 3 or 1 to 2. What else?
You're probably overbought at that stage.
I'm not going to give you that one because you don't know. Don't really know that. I'm fishing for the last kind of answer, because you guys gave me some good other answers for this. One of the baitest things ever.
Oh, the pip average or golfing coverage?
So engulfing candlestick patterns, guys, are a sign of strength in an opposite direction. Okay? This is bullish engulfing candlestick pattern. This is a bearish. Well, to them, I've got a different definition of what I like to say. But either way, but have a look at this one over here in our example. This market goes all the way up here, goes to our target, which is our milestone, which is this liquidity level over here. Yeah, where it says liquidity over here, if you could see it. It's behind this little euro thing, I think, yeah? And then we get a big bearish engulfing candlestick pattern. As well as the fact that you've seen this, like you said, wick rejection, as well as the fact that you said you see strength and speed of this red candle pushing down, as well as the fact that we just took liquidity, as well as the fact that we started down here and we're at a 1 to 2, 1 to 3 trade. All of these things could make us do this. Look at our phone or look at our thing and say, if we didn't have a physical TP in here at this level, could say, I'm out. I've made my money for the day. I'm done. Now, what could happen is you come back later on and this trade is in space. Who cares? You made your money for the day. You know what making your money for the day, even on a ridiculously low expectation, ridiculously low. This is ridiculously low on a 100K account, is ridiculously low. But we know what that does for you and your family, just hitting a ridiculously low expectation. The question you've got to ask yourself is, do you have the power to be like, cool, I'm done for my day. That was my one morning liquidity grab, manipulation W, tap in, easy trade, do the next level of liquidity trade for the day, and I'm done now to go and get on with my day. Do you have the power to do that? Because remember, if you start trading, as soon as you start trading, you're not balling out of control. You're still in the struggle. You still got work, you still got to pay bills. You can't be in front of your screen all bloody day. Because you're going to end the month realizing, not learning too much, and realize, right, you ain't made no money to pay your bills. But you can do this. and start chipping away and getting these wins and building confidence. And then you will realize at the end of the month or year, or whatever it may be, that you took 10K and this month you made 1K from trading a 1-2 setups in the morning and then just turning your computer off. And then that will give you the confidence to say, rah, I should have just put in the 100K. Because then I would have made 10K this month, which would be enough for me to stop working and go and live the life that I want to live. Doing the exact same thing. And if you get a long enough history of doing that, you can go and get other people to give you their money and say, look, I've been doing this with my own money, my own 10K or my own 100K for some time. Invest in me. And then you could get investment money in here so that this 10K or this 100K is actually £1 million. This is the dream. This is the goal, to use other people's money to grow that account. Maybe that account has 10 million quid in. Maybe the account has 100 million quid in. And you promised everybody a certain percentage return. Or you said that you take a performance fee. Now you're making money hand over fist, doing nothing different, doing the exact same thing you did when you had 10K. But it's this power to be able to say, I'm done. I'm happy. I don't want to give my money to the markets. Let's go and look at another example real quick. All right. Someone pick a pair, a random pair. Let's pick a random. Oh, no, let's not pick a random pair. Let's keep it within the remit. Let's just go to US 30. Not even a pair I trade anymore. Yeah. I actually don't trade US 30 anymore. You know, like that. I'm mostly interested in GU and EU. Okay. I'll tell you what, let's go back to GU and EU. We could do it here, but we're not going to do it. Let's just use GU, but let's pick a day with any day within the last couple of weeks. Somebody pick a day, any day from the last couple of weeks, just so we can get the data.
Just Monday, bro.
Let's go Monday. Let's go Monday. So we're going to say this is, I really want to put these lines on. I don't know what it is. It's one of these here that's going to give me the lines. I think it might be this one. So this. I want to see the lines that shows me the day open. It's one of these guys. I'm not gonna lie to you. It's one of these. Show kill zone range, display price. It's one of them. All right, let's just go back. We'll go like this so we can see it here. So this was Friday. This was Thursday. All right, so we're gonna go back to Monday is over here. Oh, just before we've lost the day off. Cool. All right. So if I was sitting here, I've framed the day. Have a look. Here and here. I'm waiting for liquidity to be taken before I can get into a trade. Let me ask a question to anybody. Have I taken any trades on Monday? Have I taken any trades on Monday? Just based upon the statement that I've made that I'm looking for liquidity to be taken from here or here to show me what I need to see before I get into the trade. Just based upon what I've said, have I taken any trades on Monday? Well, the answer is no. The answer is I didn't trade on Monday, so I didn't see what I wanted to see. Yeah, because what I wanted to see here is the market. This is based upon one strategy. This doesn't say that JP didn't get in a trade for the buy on Monday. This is based upon our one strategy that we understand. And our one strategy that we understand is this market here took liquidity from above Asian session, but didn't give, look, where is the change of character here? Where is it? Can anybody see it? Because if somebody could see it, they should let me know. Even here, have a look. I'm on a 1 minute time frame. Yeah. Even here, where this market did this, it didn't give us our change of character. Look, because the market here was making higher highs. I made that white. Orange is just throwing me off. Higher lows, higher highs, higher lows, higher highs. Look, the only time it broke this structure over here was over here. Made a lower low. Made a lower high. Did it continue and make another lower low, which is what we look for? No, it didn't. So even here, where it looks like the market's going in the opposite direction, it dipped its head here below that structure. Yeah, but it didn't continue. It just dipped his head. And then it kept going this way. There was we haven't seen for this whole journey. The market decided that it wants to turn around and give us a trade in the opposite direction. So if you was trading that one strategy, you're not in the trade. You're not in the trade. Let's go and look at another day. So Monday, you didn't get in a trade because you didn't see what you wanted to see. It's not a problem with that. There is no problems with that. Okay. Now, we understand some other things. We don't only understand the liquidity. We know that the market likes to sit down on previous battlefields. We know that the market likes 50% ranges. We know that the market can indicate, correct, and continue in the same direction, okay, based upon what the market wants to do. But I'm just saying to you, if you just knew one strategy, for example, here, have a look at this one here. So this is Asian session framed. This is the market taking some liquidity from below here. And this is our concern. Our concern would be, the market's tapping in to 50% of the range. So maybe in this instance here, we either got out of the trade around here, or we protected ourselves and we didn't make any money. Maybe we identified after this market started coming down here, have a look, another point of interest here. And we was waiting for the market to see what happens when the markets took that level. And maybe we was able to get into a trade somewhere around here. Now, I can't see it on a 1 minute time frame, obviously, which is Tuesday, because this isn't how I like to see it. But let's have a look. Let's try and see if there is on a different time frame. Let's go back to Tuesday. Let's go back to Tuesday. Let's go back to Tuesday. Go back to Tuesday. Yeah, this is Tuesday. Yeah, maybe on another time frame there's a great entry. I can't see it on the 3 minute time frame for what we look for. Okay, which is our manipulation. Oh, let's have a look. Maybe it's ugly. All right, it is ugly. Okay, but we can see the market do this and then push up here. That would be an indication. That would be a correction. Up here would be a continuation. Now we're quite deep in here, so I'd be ideally seeing whether or not when that market pulled back into here, whether there's a smaller entry in here. So I'd be looking for. So in that, remember that little yellow circle. Let's look on the 1 minute time frame. Because it's easy to say, oh yeah, boom, I would have taken the trade all the way at the bottom of the wick. Well, you wouldn't have. I'm going to put this date in the calendar so I have to stop going back. Is there a smaller entry when that market corrected? Yeah, there is. Yeah, because here the market came back in here and once again made a change of character, manipulation W. Have a look, let me zoom in because somebody can't see. The market came down here. We was looking at here for an area of where the market was correcting. We was hoping to see a continuation, but before it continues, it has to change character again, isn't it? And that's what it does right here. And then it taps in without violating that low over here. And we could have potentially gotten into the trade here with our stop either aggressively below the last low, yeah, or safer below the actual manipulation W in a 1 minute time frame as part of the correction. We could have got in here. So let's say for argument's sake, we take an aggressive trade in here. Where are we taking that trade to? To the milestone. Well, here's a milestone. That's a 1 to 5 trade. That happens very quickly. Even if you had a fixed hard stop loss there, it's a 1 to 5 trade. Why did you say there? Because here's the top of Asian session highs. All of this stuff here, liquidity has been taken. So all of these levels don't really matter to us. That's our strategy over and over and over again. Okay. Now, what have I done here? Well, I've said that this market on a larger time frame made a manipulation W. Have a look. Let's look at the logic. I said that on a larger time frame, the market made a manipulation W, taking our liquidity that we was looking at anyway. It didn't do it in the first Asian session, but we saw a New York session that it came down here and it wicked below here, made a big manipulation W. We understand when the market makes a manipulation W, we understand that's the indication there's going to be a correction and then there's going to be a continuation. Yeah, so above this level here is indication. So if I was to color this in, that's indication. Then we understand that afterwards we are looking for correction. Whoops, looking for correction. Now, what we can do is, yes, we can wait for the continuation over here. Wait till that candle closes above. But if this has happened on a big time frame, let's say this is a 15-minute manipulation W, we understand that for that market to continue from where it's corrected in here, on a smaller time frame again, has to be a change of character. Because it's coming down here, it's making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs in here. So we understand that if this market does turn around for the continuation, it's going to have to do this and change character. And if it changes character here, then that gives us an opportunity to get in. It's a little bit more aggressive, but on a better entry in here. Yeah, either aggressively below the last low, which is a little bit more aggressive but higher risk, or below here, medium risk, or the lowest risk will be down here. Yeah, but unnecessary. I hardly do take trades like that. I would be typically a bit more aggressive here in my trade. And then we're expecting this market to continue and break above this high. So there becomes a first target if you really want to go there, because I'm expecting it to get there. So I'm happy. I'm watching that level. When I'm in that trade, I'm watching to see. You heard me say it yesterday. It was a trade. I said, look, I'm waiting to see if that market closes above here is the real level I want to see. That's the first place. But ultimately, this manipulation W that happened on a 15-minute time frame after taking liquidity is going somewhere, isn't it? So where is it going? Well, it's going to that next place of liquidity, which in this instance was Asian session highs. And as soon as we got up there, yeah, we had a little shimmy and then another little push. But then we came back down. And have a look at this. I'm going to wipe my whole charts because we understand some of the gems that I've been given, and we've banked them gems. We understand that the market's like 50% likes to come back to, even if the market wants to go up, the market likes to come back to 50. All this energy here is in and around the 50% level of this impulse. Oops, let's use my highlighter of this impulse. The market pushes up there nicely, retraces back to around 50%. Let me show you something again, because this is too easy. Yeah, and we're seeing it. I'm showing you guys it in real time. Yeah, because Darren picked this day randomly. Monday we took no trades. We moved on to Tuesday. There was a trade. We moved on to Wednesday. There's a trade. Now we're here. Look, have a look at this. Let's imagine that this is still London session. All this is London session. It's 10 o'clock, 11 o'clock, 12 o'clock. We know that the market simply accumulates. So it's accumulating at the 50% level. So let's understand what's happening. Let's read the book. The book is that the market is bullish at this on a smaller time frame. It made a bullish impulse. It came down to 50% and then started to go sideways at 50%. It's like there's a team of muggers. They're planning on mugging you. Oh, my analogies are strange. They're planning on doing robbers. Let's say it's robbers. They're planning on robbing a house. So they travel from their location. They get to the area of interest where the house is, round the corner. If you was watching the GPS, if the police was doing their obo afterwards and they was watching the GPS, yeah, they would see that the car moved from here. The vehicle moved from here. Let's get a little vehicle. Where's my vehicles at? Is there a little car here somewhere? I'm sure I saw a little car. Yeah, my car's a spaceship anyway. In fact, it's not anymore. But here we go. Here, all right? They saw the vehicle travel to 50% of the impulse over here. And then the robbers started to congregate. Start to think about it, saying, okay, Jason, remember what we rehearsed. You're going to go in. You're going to do what you need to do. All right. Go straight for the safe. And then we see the market do what? In New York session. Somebody talked to me, this is too easy. We see them go and commit the robbery. Look.
Manipulation.
Exactly. They go and commit the robbery, bang. And let me tell you something, even if you wasn't here in this, able to catch them here, you know that true the robbers are idiots. Somebody forgot their gloves at the scene. Or somebody said, oh, I think I touched the fridge freezer with my bare hands. And you go, what? You touched the fridge freezer with your bare hands? You stupid, bro. If they catch you, they're going to catch all of us. Go back. Yeah? Go back. Tap into the level. Wipe your fingerprints off, buddy, and then let's go. And that's exactly what the markets do. Yeah, the markets came, the market made a beautiful manipulation W pattern after manipulating below the accumulation. And then the markets tapped in. Yeah, let's look at it on a candle basis. The markets, even if you took the first tap in here on this wick, the markets tap in. And you're like, okay, I see you. You're waiting for the market to close back above. Let's just even take that closure over here. You can either be aggressive below this last wick low or safe below the swing low. Either way, New York starts. That's your trade. We're gone. And we're going to, guys, I'm telling you, repetition, yeah, muscle memory would have you understanding this. Where are we going to? I'm going to be looking left, looking for places of liquidity. If I get in this trade here, this is going to be a first target of mine. Okay? The only reason why I'm not even caring that much about this target in here, yeah, is because London, this is all London session still, even though the yellow box stops here. London was coming down for something. London, this is London moving into New York, was coming down for something. Came down to 50%. Remember, the market's bullish. The market's dancing around 50%. The market didn't come and violate this low over here. The market is like, if you're doing steps, you don't put my dots in, it normally helps when I put the dots in. This market on a bigger picture is coming from down here. Let's make it white. It's what's going on there? Yeah, it's stepping up. Look, it's making higher highs and higher lows. I'm expecting this dot here. This dot is, I'm expecting this dot to come up here. Exclamation mark I'm trying to draw. I'm expecting this dot to go this direction, to break this high. Why am I expecting? That's what the market's been doing. It's been making higher highs and higher lows. So I have an expectation that this market's going to break this. This is a target for me that market violates there. Take profits, take profits, take profits. These are all points of interest where the market's going to take profit, where we're going to be looking to see that, yeah, this trade's done really well. And whether you've put a fixed physical take profit in there, or you're watching this market until it gives you the sign that it's had enough of exhaustion. Until it gives you this, if you're watching it saying, well, I'm just going to watch it because this market's going really, really well, maybe there's some fundamental news that's also helping. Yeah? So when that market comes up, this is a New York PM session, you might decide that here is some, even here doesn't give you, you might decide that here's structure. As soon as you see this market start to come down here, come back here, dance around here, maybe you go out here. Maybe. So maybe you squeeze a little bit more at the trade. Yeah, using the trade for longer than you need it to be, but still a great trade. Still a lovely, clean trade with no issues. This is our strategy on a basic level, guys. This is our strategy. And we see it play out time and time and time and time and time again. And if it doesn't, if we don't see it play out, we don't trade. We don't take a trade. We haven't got our signals of what we want to do. We haven't got our confirmation that we can get into the trade. You can't take the trade because you don't know what you're doing. But again, we need to rewire our brain to understanding that just because we opened our laptop doesn't mean we must hit the button for a trade. because I know there's every single person here has taken a trade when they know that they shouldn't have. I have taken a trade when I didn't. The same rules I'm speaking to you all slowly and emphasizing on this call is the same rules that I didn't respect and I didn't stick to, and I'm in a trade for some reason, and all of a sudden it's gone wrong, and now I've lost that money, and I know why. I know why. Because it wasn't my rules. I was just doing a madness. Guys, we could keep going with this over and over and over again. So look, what we've learned today, this is summarize, our pain today because we're finished. So the summary of today is that, I've gone over this so many times with Darren, with Jay, with everybody's sister, everybody's here, all the family members, other members. The strategy. As in, that's the fundamentals. So there are intermediate, there are advanced. Yeah, which you guys know some advanced strategies, some stuff, but this alone is enough to get you paid. This strategy that we spoke about here is enough to get you paid. Identifying the points of interest. This is a point of interest. Just like this was a point of interest, yes, but this is a point of interest. As soon as that's been taken, as soon as that level's been taken, we're watching to see, are we going to get what we need to see? If we don't see on a 1 minute, we're watching on a 3 minute. If we don't see on a 3 minute, we're watching on a 5 minute. Yeah? We're looking for it. When we see something and we see strength and speed, game time. It is game time. Especially if we understand this market's been in a bullish trend and we're trying to get in for the buy. Yippee-ki-yay. Yeah? If we don't see what we need to see, like on Monday, where we didn't take, for that strategy, where we didn't take a trade, if that's what we're basing it on, I'm going to say, Jay, man, I was waiting for this market to come down and push down. It never pushed down into the liquidity. I didn't get it. I'll say, cool. I'd say I get you. I could say other things, reason why we could have got into a trade. Yeah, but I'm not going to say it now and say why we could have got into this buy. But ultimately, I'd say, cool, man, that's good. You ain't lost no money. Your life's still rolling. Monday came and went and everything was fine. Then Tuesday come again and boom, I got a trade, Jay. Great. Wednesday came. Was this Wednesday? Yeah. Boom. Possibly, I don't know. I don't know about Wednesday. We did see a liquidity get taken by this wick, but it's a bit meh. But we saw the strength and speed. Maybe you got into a trade here. Maybe. Place your stop below these lows. Maybe. And you saw New York play out. Maybe. Yeah. Asian session over here. You might have said, I didn't see what I wanted to see, Jay. This is just based upon one play, which is the Asian session framing liquidity grab play. One play. You say, look, okay, on Thursday, I didn't take a trade because I didn't see what I wanted to see. Okay, cool, no problem. Didn't take a trade. Here we saw liquidity taken here. Maybe you say, oh, Jay, I got into this trade, but the market was bearish. Have a look at this. I'm just talking you through what I'm seeing. The market was bearish. So I'm concerned about that because the market is making lower lows, lower highs, lower lows, lower highs. And then Japan's come, Asia sessions come. So therefore, if I got into a trade here for the buy, when the market's flowing bearishly, so the market's flowing in this direction, and I've got in for a buy in the opposite direction because liquidity was taken from there, well, the target is going to be 50% then of the Asian session is going to be very, very relevant to you because you're saying the market's going down. There's not necessarily a reason why this market should come all the way up here if the market's been coming down. So, but if you saw the liquidity taken and you just happen to be wherever it may be, and you took this session here, this is early anyway, you'll be looking at this market and saying, this is what I say to you in regards to understanding the strategy. 50% in here, you started seeing the market making a reaction to continue going bearish, and that could be a second play. Not the first play, not the Asian sessions grab. The second playbook could be you understanding 50% is a point of interest. You understanding London's just open. And here is where you're looking for a change of character. Because you understand that the market's been flowing in a bearish direction. So you believe in that the market was going to take liquidity, which it did here, in London session. Came down, took liquidity, had a reaction, but at that 50% level that you should be looking out for anywhere, you're looking for, but could this be the end of the road? The market came here, London started, market was here, London started, came for the liquidity below Asian session, took the liquidity, had a reaction, but at that 50% mark, you're looking to see, are you going to get a change of character? And when you see the market changing character and breaking structure, you're like, you know what? Even though this was one play in regards to Asian session liquidity grab, the market didn't grab from above to allow me to just sell. The market grabbed from below and then got to 50% and then changed character. Okay, well, I'm selling. I'm selling today. And we're down here. As well as other confluences that we know we can have, other playbooks, other areas of little flexes. For example, the daily, understanding what happened yesterday on the daily time frame. Was it a bearish day yesterday? Did we get an outside candle? Is there an opportunity that the market wants to come in here and close in balance before, close it in balance before continuing to make a red candle? I've jumped around a little bit today, guys, but I'm basically trying to show you guys that, you know, like I tried to show Jason that, Jason, what you're doing is you are achieving things that high-level traders are achieving, or not say high-level traders that are driving your dream car are achieving. You just don't have enough money. So what you need to do is you need to reprogram your brain and say, you know what? I've won. That £200 that I've made is 2% for the day. It's £1,000 in a 5-day week. It's $4,000 in a month. That's winning. It's not losing. So you need to ask yourself, hence the reason why I did this spreadsheet, which I think all of you were slightly deluded, okay? You need to understand, what does winning look like to you from your current position, not from the position of P. Diddy. No, let me not use P. Diddy because his position's looking a bit leaky, but not the position of, you know, Jeff Bezos or the guy you've seen on Instagram, because you don't know what his life is like. You don't know what he started with. You don't know his family are billionaires or zillionaires and whether or not £78,000 a year is peanuts for him or not. You need to look at your life. What does it look like for you? What does winning look like for you? How much money do you need for you to say that I'm winning? Because if you made £300 today from your laptop before 10 o'clock, which is £1,500 in a week, I think you'd feel really, really proud of yourself. I think you'd feel like you're really doing something with this trading. But yeah, man was telling me they need 750 out of their 100K. They need 500. They need £1,000 a day. They need. That's what they're telling me. They need £1,000. What do you need it for? What £1,000 a day bills do you have that I don't know that you're paying for now? I'm just asking. Sister Banner needs 15K. Why do you need this? Because the more you reach for that top shelf, the more possibility you have when you're on your tippy toes, reaching for the top shelf because you need what's on the top shelf. The more possibility you have of falling on your face, which most of you have experienced falling on your face. So do me a favor. Just humor me. Humor me and try not reaching for the top shelf. Humor me and try to lower your expectations and achieve them. You see, in all other walks of life, it's like, yeah, have high goals, you know, aim for the stars, and then you'll reach. No, I don't want you to do that with this. I want you to understand that if you could just do this, you could potentially, even though the numbers are not correct, do that at the end of the year. You could potentially do that every month. And do that first, and then start getting creative with it, adding some sauce on it, saying, you know what, Jay, in fact, let's go for 750 a day. I've got my 100K in there now. I want to keep that safe. Because let me tell you something, what you don't want to do. I know for a fact when you sell your house or whatever it may be, and you take 100K out of your 200K, you definitely don't want to start looking at the 100K and it starts looking like 90K, 80K, 70K, 60K, 50K. It's allowed to go down a little bit because you're not going to win all your trades. Yeah, if it's 90K, 95, it's not the end of the world. You're like, right, I've got 100K, I am 5K down, but you're not killing yourself. But when you look at 100K and it's 60K, 40K, then you're going to be like, oh my days, what have I done in my life? So protect it, yo. Trade it on a calm. Risk £300 out of your 100K. Give yourself enough room to win. You might not giving yourself enough room to win. When you listen to these traders and these podcasts that I play, what do they say? They just say traders about persistence. Can you stay in the game long enough to win? They say it over and over and over and over again. They don't say, yeah, traders about this. I'm just going to hit Every time I hit the button, I'm going to hit. They say trading is about, can you stay in it? And that's probably with a lot of things. Business, relationships. Do you have enough resilience to stay in your relationship long enough to deal with all the headache, to say that you've got a partner, a long-term life partner? Do you have that resilience? Because it's not going to be easy. It's not every single day you and your partner is the sunshine and roses. No, it's going to be nonsense on many of the days. Maybe even on majority of the days might be nonsense. But if your goal is to have a family, then that's what you've got to do. You've got to stay in it long enough that you win, and hope, and on them winning days, they're going to give you a bigger risk to reward than those losing days. So even if you had 70% sad days in your relationship, see the 30%. If the 30% rewards you 1 to freeze, you're still up. It still makes more sense you having been in a relationship than not being in your relationship. And this is what people don't understand. When I see all them, like, you know, these relationship things on Instagram, and man saying, if you're not happy, blah, 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 blah. Yeah, I don't think you're defining happy correctly. Yes, you could be alone and, you know, go to whatever clubs you want to go to and whatever parties you want to go to and not have to deal with any headache. But is the headache worth you having a partner, watching your kids grow, seeing certain things? Because that joy you're supposed to get is supposed to not be that's not a 1-to-1 joy. That's supposed to be a 1-to-5 joy, 1-to-8. You was there for their first steps. You was there this, or you enjoyed this, or you went on this holiday to Gambia and you enjoyed each other and experienced things you never experienced. This is the same principle, guys. Guys, have an amazing day. I know I went over. It's late, but that's what we want to change. Let me start the recording.